Welcome to Markets Now. I'm Michelle Rook with Mike Miner of Professional Ag Marketing. Mixed day in grains and hogs, higher in the cattle market. And Mike, let's talk about soybeans. We did into the plus side there. I think we've shook off the tariff fears here pretty well. But did we trade higher today because of all this talk of maybe China coming in and buying more beans?
Maybe a little bit of soybeans. I still think you look out, February time frame, especially. Brazil's quite a bit cheaper than the United States for that time frame. So we're still running on borrowed time a little bit on exports. They've been improving, but still not quite what they probably should be to get the futures too excited. We've got back up to a point where we can hit some of the USDA targets, but nothing to really get excited about. I thought today was more price action based on that lower US dollar that we saw today, Michelle.
Okay, and why do you say that? Because we've had other days, Mike, where the dollar's been lower and soybeans haven't gone up. And I would also mention soybean meal had a good update too. Maybe that helped.
Yeah, soybean meal had a good update. I think that could have been tied to soybean oil being drugged down too. It seems like those two have been flip-flopped recently pretty strong. But yeah, that soybean market kind of bouncing up against some resistance areas here. March right at about $10, for example. It's been a little picky and choosy, but some exports could have helped us out last night too, Michelle.
Yeah, and of course, we're into the end of the month time period. So some unwinding of meal oil spreads certainly not out of question. And the funds are short here, Mike. So maybe they also just covered some shorts.
Yeah, the wheat and the soybeans, kind of the last two to really catch up, I think, on those short positions that they've got.
Let's talk about the wheat market. Since you mentioned that we had a tough down day here today, what did you make out of that?
We fought our way right back down to some old support levels, right at some old lows. I was kind of pleased that we went and just did it and we didn't drag it out for another week. We just went right down to those old levels. Kind of seem to be holding in here. So we'll see if we hold these levels or not. Yeah, the floor seems pretty decent on this wheat market, I think, at this point. The funds have been very bearish. They've been not afraid to sell it. You've got a ceasefire situation going on right now that probably didn't help it. You've got improving fantastic conditions here in the United States on this winter wheat crop, and a few things there, I think, just not helping. And then you look at some of the bigger picture items too. Russia, Ukraine seems to be taking a little bit of a breather now on any impacting market news. So the wheat market just hasn't had a real good bull case, and we've been in a real strong downward pattern. But at this point, I think the floor is getting close, and we've got some good support areas here, I think, for the wheat market.
Yeah, no doubt. Now we've got first notice day coming up on Friday, so maybe some liquidation as a result of that in the wheat market. And I mentioned wheat after soybeans because corn actually looked like it kind of got stuck in the middle between the tug of war between higher beans and lower wheat.
And that's been the moral of the story. I mean, corn's had this slightly up, just barely uptrend there that it's been holding, but it's been lower the last few days. We've taken some profits ahead of first notice day, which totally makes sense. Some contracts getting priced with basis contracts coming up. So first notice day Friday, no trade tomorrow. So that's what we're looking at there, Michelle. And the corn market, I mean, it's probably in its own world with you've got pretty decent improving fundamentals. Demand has really kicked in the low fours so far. Something we really haven't probably seen on soybeans or wheat yet compared to the corn, Michelle.
Yeah, and I mentioned tariffs on the onset of this broadcast, and obviously the talk of Mexico and Canada having 25% tariffs slapped on them. Corn market handled that pretty darn well. In fact, most of the grains did now, don't you think?
It's incredible. I mean, I wake up every morning and it seems like I have 5 headlines that popped up about some flash news about tariff that, tariff this. And it seems like nothing's impacted the markets recently on that front. And I kept telling myself it's going to be a knee-jerk reaction in the market on any retaliatory news from China or Mexico. And last night we kind of got it. I mean, Mexico president came out and said that she would enforce retaliatory tariffs in response to Trump's plan. And for corn to be up after that, I thought was impressive. And the hog market really didn't take it too hard either. So the tariff news has not had as much of an impact as I think myself and a lot of other people maybe thought it would have already.
Yeah, Mike, talk about the impact that the 25% tariffs on Mexico and Canada would have on the hog market.
The hog market, it's really important. We send a lot of business, a lot of our exports go to Mexico right now. They've been a really big buyer, a really good trade partner. So that is not bullish on the hog market at all. So that would be significant. And they buy about 41%, or they account for about 41% of our export commitments on corn as well. So they're a very big buyer of corn and pork from the United States. And that'll be significant going forward if that gets interrupted. And we've seen some other interruptions this week, with the worm situation like you've seen in the cattle market, but a little bit different when we're importing something from them rather than exporting it to them. So it's going to be a big talking point. I think that doesn't go away for quite a while, and kind of a new one. We've been through the trade war with China. Mexico's been a much larger trade partner with us this time around than they were last time. And it's going to be important, I think, for both the corn and the pork balance sheets going forward, that trade relation goes smoothly.
Yeah, we are so reliant on Mexico, and pork is so reliant on exports, period.
Mhm.
So it's a big thing to watch here. We did make new contract highs even today in some of these contracts, though, and like February sold off. Is that a concern to you, or do you think that triggers any fund liquidation?
Well, February was the big one yesterday. I mean, a 235 move higher out of February was a huge day. Probably when I looked back, at least, it sure looked like the biggest day we've had on that contract. And when you look historically, to get above 90 or get above this level on the February is really big territory. It's new territory. It's hard to get that up above 90 too much further. Now, if you look at like some of the summer months at $100, like we could trade that up another 10 or 20 historically, right? It seems like the ceiling is a lot more flexible on those summer months. So that February contract to be in this rarefied air is unusual. And to see a little bit of a setback today, I think is just fine from that blow off top we had a little bit yesterday.
And cattle were kind of the bright spot of the day. New highs for the move again in the feeder market, and live cattle futures higher here, but some of that was tied to this higher cash trade that we got today, right?
Yeah, a little bit higher cash. On both pork and beef side, I think for slaughter, the Packers haven't really gained a whole lot of leverage on the producers, and this is a really good week to tell with a smaller kill week. It gives you a good breakdown or good feel of how the marketplace is sitting. So for the Packers to still be doing some business right before Thanksgiving, even if it's for the next week, is a pretty good sign. And we've had really good demand, Michelle, on the beef side. To see that spike that we had in choice cutout for pre-holiday buying, it went way up and then it came right back down. But I think just to see that spike is a very good sign in demand, and I think that's something that has really supported the pork complex as well. To see pork cutout still in the 90s after Thanksgiving is impressive. So that'll be a few things to really watch going forward. But I thought that was a very good sign that we saw out of choice cutout on this last little bump.
No, that's a really good point that you make about demand driving that, because that allows those packers to pay those higher cash prices for sure. So I mentioned feeders making new highs for the move, and the cash market had been on fire prior to this announcement of the Mexican border basically being closed due to New World screwworm. How explosive could this market get here if that stays in place for a while?
Well, you're going to run up another $2, $3. There's going to be a lot of resistance areas where we spent last spring at. So I think it's going to be tough to get through those levels in the meantime. I do think this screwworm situation is probably a little bit of a short-term thing as well. So I'm speculating on that. But from what I've read and people I've talked to who know more about it than I do, I'm thinking it should be a little bit of a short-term blip. Now, we'll run into some of these resistance areas, but fundamentally, cash trade's been fantastic. The fundamentals look fantastic. So I think at this point you could start to retain some heifers as well. And that could be a really nice spot to see some explosive markets. But to get through these resistance, it's going to be a battle. And then once you break through that, then I think sky's the limit out of this. So keep an eye here over the next few bucks. And if we break through some of those resistance areas, watch out. But I'm still covering up pretty good here at this time, I think, Michelle, at these levels.
Yeah, we've had a hard time getting through those resistance levels that you point out. One last question for you on the cattle market. We talked about tariff impacts on hogs. 25% tariffs on Mexico and Canada actually would be almost a little positive for cattle, wouldn't it?
I guess so. I mean, we're importing a lot of cattle live and meat as well from multiple countries, from Mexico for one, and on the live side, and then we're getting beef from Brazil and Australia as well, cheaper quality meats and things like that. But I guess the beef side is probably not as big of a deal. We import quite a bit right now with our tighter balance sheet. We still have, demand's been so strong, even though we've been, had another pound or so available per capita of beef available in the United States this year. So for us to be at these cutout levels, even with more beef, is a really good sign for demand. And consumer confidence still looks really good, highest in more than a year now in this last report. So Americans are pretty upbeat about the labor market and opportunities there. And if that continues, then maybe this will be a bigger deal with imports slowing up into the United States if something happens there. Otherwise, it might just work out perfect timing if we see imports slow a little bit if demand peels back as well, Michelle.
Okay. Thanks for joining us. You have a great Thanksgiving. Mike Miner with Professional Ag Marketing, and that is Markets Now.